What's going on, guys? Welcome you guys to my channel. My name is Henry Grace. Okay, and today's topic we're going to talk about market structure shift for harmonic patterns. Okay, market structure shifts can be applied to any strategy at all you are trading, not only to harmonic patterns. But in this video, we're actually making a particular reference to trading harmonic patterns. Okay, so we're going to look at market structure shift for harmonic patterns. Now, it is the solid foundation for high probability harmonic patterns and for high probability trading setup. Okay, so now if we go further on this, what is the prerequisite for understanding the concepts in this slide or in this video? You need to have a solid understanding of liquidity, fair value gaps, and other blocks for you to be able to comprehend what we are going to discuss in this video. So if you don't have a basic understanding of liquidity concept, fair value gaps, that's inefficiency, and other blocks, I will encourage you to check around to be able to understand how to do that. Or you can check the video. I'll put a link below this video for you to watch videos on liquidity, fair value gaps, and other blocks, and how I'll be able to, you know, make it clear to everyone so they can be able to understand how to spot them on the chart and then use them to your trading advantage. Okay, so you have to be able to have this basic understanding of liquidity, fair value gaps, and other blocks for you to be able to comprehend what you're going to discuss in this video. Okay, so now the market structure shift. How many patterns are reversal trading strategy? Now, I get asked question oftentimes that harmonic patterns and harmonic setups, are they continuation trading strategy or are they have reversal trading strategy? They are reversal trading strategy, of course. So we are trading reversals. Okay, so we are trading reversals, and because of how the strategy is, you have to be able to understand that you don't just pick any point in the chart and then you don't just see any setup or any pattern that you begin to trade. You have to make sure that the pattern is valid and it is a high probability setup or a high probability pattern for you to be able to trade it. Okay, so for a successful reversal scenario, there has to be a market structure or shift. That is what you need to understand, and then it even make a lot of sense. We are trying to trade reversals. Okay, we are not trading continuation. So for you to for there to be a truly for there to be a reversal, we need to do what? See a market structure shift. We need to see market shifting from bearish to bullish or shifting from bullish to bearish, as the case may be. Okay, so there has to be a true market structure shift for us to be able to what? Pick that point as our reversal, as our confirmed pattern of high probability. So your understanding of market structure shift will enable you to filter out patterns of high probability and patterns of what? Low probability. Now, the word probability here means that everything is out of chance. Okay, so anything can happen. Okay, so we are only looking at quality setups of high probability, because probability is a game that we don't know at any point in time losses will come, but we need to make sure that we are picking out setups that have high quality, setups that's of high probability that will definitely play out. Okay, so that is what we are talking about. Now, market structure shift is divided into two parts. We have the bullish market structure shift and the bearish market structure shift. Okay, so this concept we are discussing in this video is very, very important. In fact, if you really want to do good, if you really want to do good in trading reversals, you need to make sure that you have understood this concept very, very well. Okay, whatever we're going to discuss in this video is very, very important. Please do not joke with it, because it will help you to be able to filter out quality setups that you can be able to trade confidently. Okay, so take out your pen and paper, take out your jotter, and note down every single thing we'll be discussing in this video. Now, bullish market structure shift. The market will deliver price to an old low, okay, then quickly shift higher. Significance is placed on the term quick with displacement. So what we are saying here is this: when you see a market in a continual downtrend, okay, so we are making a series of lower low, lower highs, lower low, lower highs, and it get to a point where eventually price takes out the last price straight into a last low, or into a low that has not been traded, that price has not broken through before, and then break structure to the upside. So this break of structure has to be done with for displacement. Displacement in the sense that price has to leave behind fair value gaps and what other blocks. You see, so this is the place where your knowledge of order block and fair value gaps has to come into play. Like I said before, I'm going to drop a link below this video for you to watch video on fair value gaps and order blocks and liquidity. Okay, so we need to make sure that this displacement, this break of structure, this bullish break of structure to the upside has to leave behind order block or fair value gap at this point. Okay, more especially at the discount zone. Okay, what I mean by discount zone, just very close to the low. Okay, so this is a very simple illustration of bullish market structure shift. So when this thing happens, it means that markets have shifted structure from bearish to bullish because of what? We have a sweep of liquidity and a break of structure to the upside, leaving behind fair value gaps and other block. That is just it. A sweep of liquidity, meaning that price has swept the liquidity of the old low and break structure to the upside, leaving behind fair value gaps and other block. So whenever you see this kind of scenario, we have seen what we call a bullish market structure shift. Okay. Now a protected low. Now previously, this low becomes a protected low. This low becomes a protected low, meaning that price we expect, or we expect price to respect this low. Now the word expect means that price can still trade past the low. Okay, but I can say before, we are looking at setups of high probability. That doesn't mean that we are not going to take loss, but all we are saying is that these setups are the ones that are of high quality, that have the potential to play out almost every time. Okay, so this is a protected low, meaning that we expect price to respect what? We expect price to respect this low. Okay, so that's what we call a protected low. Now, this protected low, for a low to be a protected low, regardless of the time frame, okay, it has to take out the liquidity of the old low and break structure to the upside with displacement, leaving behind fair value gaps on other block, which I've explained to you in the previous slide. Now, whenever price returns to this low, we anticipate a bullish harmonic setup to be formed. So I know at this point in time, if you've gone through our videos, our training videos on harmonics and all of that, it will begin to make sense when we go to the chart to look at some chart examples. Okay, so now the low is a protected low. Why? Because it has taken liquidity of the old low and then break structure to the upside. Now, whenever price returns to this protected low, we anticipate what? A bullish harmonic setup to be formed. So you see situations where price is now trading back to that low, and then before price will trade back to that low, of course, price cannot just move straight into that low. It will make a lot of, lower. If it's of course, a low, it's going to make a lot of lower low, lower high, lower low, lower highs. So within those lower low, lower highs, there could be harmonic or setup into that low. Okay, so let me display this with an example. Now, for instance, this is just an example of what we're talking about. Remember that we have an old low, we have a protected low. Why? Because this low swept liquidity of the previous low and break structure to the upside. Okay, leaving behind fair value gaps and other block. Okay, so whenever price return back to this old low, we anticipate, yes, because it's not every time we're going to have a harmonic setup. So we anticipate a bullish harmonic setup to be formed here. And in this example, or in this diagram, we're looking at what we call a bullish bat pattern. You can see that the retracement is at 0.382, and the potential reversal zone is coming at what 0.886. So this is all called a bullish what? Bullish bat. Okay, so now this will give you more confidence to place your trade because you already have seen that this low is a protected low, which we expect price not to raid. So price have already raided this low and then broke structure to the upside. So this old low has been raided by price and then price have broken structure to the upside, making this low a protected low. So whenever price return back to this old low, we anticipate what a bullish harmonic setup to be formed here. So I hope it is making a lot of sense now. So when you go back to the chart, you begin to look at the chart with a different eye after watching this video. Regardless of the strategy we are making this video with respect to what trading harmonic was set up. Okay, and then someone will ask why harmonic trading. Harmonic trading is an advanced trading methodology. Okay, the concept is something that is beyond the scope of this video. Okay, but if you want to learn more about harmonic trading strategy, I will encourage you to look at our advanced Harmonic Mastery series and advanced Harmonic Mastery series videos is in this channel. Okay, look at them. You'll be able to understand how to trade them. You can as well, if you need more in-depth understanding of the concept, you can actually book a mentorship with me. I will go through the chart and then look at it together. Okay, so it is a system that has been existing for a very long time and it has been proven to work. So it employs the use of what structure and what harmonic what and Fibonacci levels. These Fibonacci levels are invisible levels of what support and resistance in the market. So this strategy employs the use of structure. We look at some specific symmetry of structures that in line with this Fibonacci what measurements. So every structure has its own specific Fibonacci measurement and they have their own specific what name and specific patterns. So in this scenario, we are looking at what a bullish what bar because of what the retracement comes what at 0.382. We have a measurement for this retracement and then we have a measurement of this point, which we call the potential reversal zone. So whenever price return back to this old low, we expect or we anticipate a bullish harmonic setup to be what formed here because already you have a displacement leaving behind fair value gaps on what order block. Okay, bearish market structure shift. Jesus vis-a-vis the same thing applies to bearish scenario, just the same concept, same everything. Okay, the market will deliver price an old high, then quickly shift lower. Significance place in what peak because we need to see that with what displacement leaving behind fair value gaps on what order block. That is just so you will see situation where price sometimes it could be very small. The sweep could be very small that you have to zoom in to see it clearly. Okay, sometimes it's going to be very visible, sometimes it's not going to be visible. But you find out that the old high has been raided, and the price have broken to the downside, leaving behind fair value gaps and what order block, just very close to the what protected high. Now this high becomes a protected high, which we expect price not to trade above until we have fully mitigated whatever is below. Sometimes these protected highs are being raided, more especially during news or during fundamentals or during momentum. You see markets or price trading above these highs and creating new protected highs. Okay, so that is just how market moves. Now let's look at the bearish example. Now, a protected high for a load, this is a mistake, of course. For this should be a high. For a high to be a protected high, regardless of the time frame, it has to take out the liquidity of the old high and break the structure to the downside with displacement, leaving behind fair value gaps and order blocks. So whenever price returns to this high, we anticipate a bearish harmonic setup to be formed here. Like I said before, harmonic setups or harmonic trading strategy is a reversal trading strategy. So we tend to buy at low price and then sell at what high price. So we buy at a discount and sell at what premium, just like the smart money. So the smart money is looking to buy above below the old low and then sell above the old high. So that is the concept of harmonics, and we utilize Fibonacci measurements with specific structures to trade these setups and patterns. Okay, so now let's look at a bearish example. This is a bearish example. Now in this instance, remember in the previous slide we looked at what a bullish bar pattern. Now in this example we're looking at what a bearish shark pattern, because now you can see that in this instance this is a shark pattern. Of course, now you can see that this is 0.886, so this is a shark of what 0.886. Now look at this point, very well. What do you see here? You see that price took out the liquidity of this swing point, which is the old high, and then broke structure to the downside, leaving behind fair value gaps and other block. Okay, so whenever price return back to this old high, we anticipate a bearish harmonic setup to be formed here. So I hope everything is making sense and it's making clear to you right now. Now this high becomes a protected high at this point in time. Okay, because it is at that point in time it is a protected high. It doesn't necessarily mean that price is not going to trade above it, but at that point in time, at that present point in time, or at that point in time, it is a protected high, which we expect price to respect. That is why you see us taking entry and then placing our stop loss few pips above this high, because it is the invalidatory level, where if price trade above that level, this whole setup becomes invalid. Okay, so that is it. Now chart example. So we're going to go to the chart right now. We're going to look at I'm going to open up trading view, just a random chart, and I'll show you guys some of the examples of how this whole thing works. Okay, so let's look at some chart examples right now. I just hope I can be able to see some of them. Let me see if I can be able to see some of them. Okay, so let me just switch these things off. Okay, so let's look at some examples. Now this is gold charts. I just hope I can be able to see anyone here. Like let's see if we can see anyone. Okay, to spot this on the chart is simple. I'm trying to use a random chart so that it will not be as if I have something, or I already have something that's, I'm trying to look at. So sometimes you're going to see price trading into that level before, moving up. So let's look at some examples. Now for gold is all about support and resistance. Okay, most of the times you will not really see gold respecting all of these. Okay, it's all about support because of the things that move the assets. It's not the same thing that move the regular currency pairs. Okay, so I'm trying to see if we can. If you don't see anything, then we'll look at some other currency pairs. But let's see if we can see something around here on gold. Okay, let's see if we can see something around here on gold. Let's look at this place. Okay, let's look at this leg and see. Let's look at this leg and see. Okay, so okay, good. So now if you look at, you can see that this is a clear example of what I'm talking about. Now let's zoom in on this leg. You can see that when price came here, we had what? Sweep of liquidity and then break of structure. Okay, and then one sweep of what? Liquidity. Okay, so I use dollar sign to represent. So you can see this is what we'll have. So it makes this low a protected low. So whatever setup you are having here, now you can see what price also did here again. So whatever setup you are having here is going to form within this within this leg, anything within here. Okay, because of what? This low is protected. So whenever price return back into this point, we anticipate what a bullish harmonic was set up. Now, in this instance, I don't really know if we have a harmonic setup. Let me check if we have something like that. This could be this would have been a cipher. But unfortunately, I don't think we'll have anything. But let me look at in these points. Let's look at 1 point. This could be a butterfly pattern. Let's look at 0.786 good. 1.272 beautiful. So we have what a bullish harmonic was set up. Now in this instance, it's called a bullish butterfly pattern into this leaving behind fair value gaps on other blocks. Now in this instance, is fair value gap. You can see that this is a fair value gap. Okay, so this is a fair value gap. You can see. So price traded into these fair value gaps, and then before doing that, we have a sweep of liquidity and a break to the upside. So this makes this low a protected low. So whenever price return back into this level, see, beautiful. So this is how we spot all of this. So let's go to other charts and let's look at currency pairs. In this instance, let's look at currency pairs. Okay, let's look at some currency pairs. Now you can see this one also. I just spotted this right now. It's very clear. Look at, I told you, this was a low, but see as price wicked that low, and then broke structure to the ups. Now this is 2 hour time frame. So if you go down, and then price will make a high before breaking that low. So you see, lower low, this is a high before breaking. So this high it created before breaking that low because the break of structure. Okay. So, and this becomes the sweep of liquidity. Now, if you go down to the lower time frame, you can see that this is a couple of candles. Now, whenever price return back into this fair value gap and other block, which price left behind, you can see in this instance now it left fair value gaps and other block. So we anticipate a bullish harmonic setup to be from here. So this will give you confidence to place trade on this on this low, because you know that this is a protected low, because it has swept liquidity below and broke structure to the upside. Now I'm also looking at this setup. This could be a bullish path. Let me look at that very well. This could be 886. This is 786. Let's look at, okay, this of course can see our price tested. You can see our price tested at 0.886. okay, so let's look at 0.5. That could be 0.5. Okay, it didn't get to 0.5, 0.38, beautiful. This could be 0.5. If we're looking at the tolerance level of 0.5, which is 0.45, beautiful, 0.45, which is the tolerance of path pattern, you can see. Now, so we have a bullish bat pattern forming at that low. You see? So when you see this type of when you see this on the chart, you definitely know that this is what you are looking at, and it's going to play out. It's of high quality, it's of high probability. So you can go on and look at so many amazing things that you can actually do with this knowledge. You can do so many amazing things with this knowledge. Now let's look at the higher time frame. Let's say on the daily time frame. It can happen on any time frame at all. Now let's look at the higher time frame. Let's look at this level right now. This point. Let's look at this point. Let's check if we can go back in time. Let's see if we can go back in time. So I want at the end of this video, you can go to the chart, look at your harmonic setups and filter out quality setups, and setups that I think are having a kind of network issue. You can be able to filter out quality setups and setups that I really wanted to show you guys that, but let's look at this level again. You can be able to see all of this playing out every time. Okay, you can see this one also. We have a sweep of liquidity here and a break of structure to the downside. Okay, making this high was a protected high at that, oh my god, network, at that point in time. I don't even know. I just hope I can be able to get a bit of where I want before on this objection. But okay, I feel this could be where I wanted to be. Now you can see what happened here on the this is 4 hour time frame. Okay, this is a sweep of liquidity, very clean, very clear to the blind, and very clean to everybody. What do we have here? a break of structure to the downside. Remember that price will create a low before sweeping that liquidity. Now, what did it left behind? It left behind what? Order block and what? Fair value gap. So making this high what? A protected high at that what point in time. At that point in time. Okay. At that point. So whenever price return back into this level, we expect what? A bearish harmonic pattern to be formed. And sometimes it does, sometimes it does not. Okay. So we might even get a kind of we might get 1 point this is another bearish butterfly pattern, because we have 786 and 1.272. So we have what? A bearish what? Butterfly pattern. So you can go to your Forex chart and look at all of these examples. Go to your Forex chart and look at all of these examples. You can see, even on this leg as well, you can see sweep of liquidity, break of structure to the upside, leaving behind fair value gaps and other block. I feel price might actually come to this other block and probably trade above. I don't know if price did that. Of course, you can see that was what price did as well. If you look very well, you have seen probably a harmonic setup also coming into that level as well. So this is basically how this whole stuff works. This is how it works, and it is a very amazing concept. A very, very amazing concept. Let's look at I think there was something on BTC. Let me just look at that if there's anything like that. Let's look at, even on this leg again, you can see at this point in time, it would have gotten some profit as well. Look at this point also. You can see we have what? Break of structure to the upside. Let's look at this point. This is a break of structure, then price returning back into this point. You can see this is what? Sweep of what? Liquidity, right? Sweep of liquidity, right? Now, a lot of things happened here. You can see. Then we have we might have what we call, we can even have a bat or something like that. I have a bat. If we look at 886, if we consider that to be 886, of course, price is never perfect. Then we might have if we look at 0.382 into that level, of course, good. So we're going to have what we call a bullish bat. 82 into that level. Look at the one that tested that 886 is this one. And even though if you go down to lower time frame, this place would have been probably, of course, even on that time frame as well, you can see that that is actually an order block price left behind after all of that. Now, I just want to make sure that I provide you guys with examples so that when you go to the chart and look at all of this, you'll be able to see them playing out back to back on the chart. Okay, so this is this. Beautiful. Okay, so beautiful. Okay, so this is order block, fair value gap, price left behind, and it has come back to do what? Mitigate that. And then at that point you can see beautiful. So this is how this concept works, and it's an amazing concept, guys. It's an amazing concept, guys. It's a very, very amazing concept, and it's something that when you go back to the chart and begin to look at some Forex charts, you'll be able to understand that this makes a lot of sense. Okay, even here, price already did this. I can see what price did here as well. Even before coming down, already this high, already did it, and then broke through to the downside. Okay, so this is an amazing concept, an amazing concept. So you look at all of that. So just go to the chart and begin to spot all of this on the chart. And I hope that after watching this video, you'll be able to, the way you look at charts will definitely change. Of course, I hope so. The way you look at Forex chart will definitely change. Then let's look at this level as well. Beautiful. This is a very good example. Let's look at this on a daily time frame. Let's look at this on a daily time frame. I think this will be the last example for this particular video. I hope you have gained value from this video. I hope you've gained enough value from this video. Now, what do we see here? What do we see here? Break of structure to the what? To the upside, right? Then what do we see there? Sweep of what? Liquidity, okay? This is a sweep of liquidity of this low, okay? Sweep of liquidity of this low. Just anywhere, just make sure that it's something that makes sense. And then before price did that, what did he leave behind? He leave this on a daily chart, and this is what? Other block. Other what? Other block. So you can see that everything we discussed on the slide is playing out here. So we anticipate a bullish harmonic setup to be what formed on this point. So this low becomes what? A protected low. You can see what price did when it came to this low. It didn't trade below it, right? Right? So now let's see if we can be able to get, now for a bullish harmonic setup, we're looking at setup of this form. We're looking at setup of this form. Okay, it could be any of this, and it could be any of this, it could be any of this. So it could have a setup where price took out the high of this before breaking to the downside and then coming into that potential reversal zone or any of that. So in this instance now, from what I'm seeing here, I'm seeing this here, I'm seeing this high, okay, and I'm also seeing this retracement. So we'll look at this. Beautiful. So this comes with practice anyway. It comes with practice, right? It comes with practice. And if you measure this now, you can see that this is a valid bad pattern. We've seen bad pattern a couple of times in this video, okay? So I want to round up this section right now. Good. Beautiful. You can see 886, 0.382. Beautiful. This is what? A valid what? Bad pattern. So now, this is how you be able to filter out quality setups, amazing setups that can be able to play out in your favor. So we have what? Sweep of liquidity, break of structure, that low or that high becomes a protected point. And then we anticipate what? A bullish or a bearish harmonic pattern to be formed whenever price return back to that point in time. So this is how you spot amazing setup on the chart. So let's finish up. Let me present again. We finish up. So now you have now understood how to use market structure shift to filter out high and low probability harmonic setups. It's time to put it into practice, of course. So you cannot just learn this, you cannot just watch this video once and then you've mastered everything. So it's something that I have to go back to the chart and begin to look at the chart, begin to look at all those harmonic setups you've marked out, and begin to look at all those setups and see if that point, if it's a protected low or a protected high. Because if it's not a protected, price is going to read it and it's going to hit your stop loss back to back. Okay, so remember, you can only trade what you see. Of course, you can only trade what you see. So the key is to spot this shift directly on the chart. The goal is to focus on high probability outcomes, but keep in mind that nothing is guaranteed in trading. So losses are part of the journey. So I won't guarantee that after learning this concept, you're not going to hit stop loss, okay? But I can guarantee that you're going to have quality setups that will play out more than losses, okay? So as you move forward, make it a habit to identify market structure shift on your chart regularly. This hands-on practice will sharpen your skills and help you to make more informed trading decisions, okay? So I know you've gained value from this video, and if this video helped you in any way, please try as much as possible to subscribe to the channel, and that is the only thing that I can actually want from you. That's all. Just subscribe to the channel and probably share the video, and you can also check the channel to see other amazing videos we have, probably on other block fair value gaps, and also on harmonics and other videos that we have on the channel. So you can as well join me every week. You can subscribe to the channel. Join me every week, every Sunday, where we look at the forex market, we analyze the market and spot out opportunities for the week or for the month. So this will be all for now, guys, and I love you guys and I wish you guys all the best, and then bye for now.